etc. We're up to our last speaker of the day, and we're delighted to have her with us. And why don't you tell us something about her?
We are super excited to have Carolyn Boroden. She's been trading since 1978, and she specializes in Fibonacci analysis. Her unique form of price and time analysis is quickly proving to be one of the most promising trading techniques using Fibonacci available today, which has coined her the nickname the Fibonacci Queen. So we have royalty with us today.
We are not worthy, Carolyn.
Her analysis is often featured on CNBC's Mad Money's Off the Chart segment. So really excited to have her here today. She's going to talk about advanced Fibonacci time and price analysis, using Fibonacci price clusters to spot profitable trades, the benefits of applying Fibonacci to the market's time axis, and the best way to make money with Fibonacci analysis. So welcome, Carolyn. Oh, looks like she's getting set up.
Well, thank you. Can you hear me? Is the sound working okay?
Sound is working just great. Hi, Carolyn.
And then I'm going to share the screen. Should I go for it? Okay.
Yes. Yes.
Now, I hope you guys aren't too tired because you had a long day.
No, we've been waiting for this moment.
No, I saw my my neighbor, Stephanie, and I saw that she had the video camera on. I was like, man, I'm still in my pajamas. I'm sorry. I just can't do it. So
hey, that's not what we're doing at this time, but you know, had to get full on hair and makeup this morning. So we're normally there, right there with you.
Okay.
Well, I'm going to turn it over there. Go for it.
Okay, great. All right. So this is actually going to be an introduction to advanced Fibonacci time and price analysis. And what I want to start with is just a chart, a blank chart that I want to ask you the question, where would you have been a buyer of Adobe in October 2019? Or why would you have been? Okay. And I don't really expect, you know, it's a trick question. I don't expect anybody to answer that question. Maybe if I had some indicators on it, they might try it, but no, this is how we do it. Okay, so one of the things that I need to do is, let's see, get my Camtasia arrows. So it'll be, all right, we're good here. So one of the first price relationships that I found in this example was, you know, I was comparing swings in the same direction because they tend to be similar to other swings on the same chart. And I had a swing down that was 54.87, and then that was projected from that high, and that's what gave us 258.24 as an area for possible support. Then we have another swing on the same exact chart. This decline was $55.77, and I also projected that from the recent high, and that gave us 257.34 as a decision. Then we have a plain old vanilla retracement, a 50% retracement of the major low to high swing. And that 50% came in right around that same area, 259.03. And beyond that, we also have a Fibonacci extension where I took a prior low to high swing and then extended downwards. And the 1272 came in at 259.05. Again, all of them pretty much in the same area. And one other projection that I ran was the 100% projection of a prior high to low swing that was 22.05, and I projected that from the next lower high, and that came in at 259.46. I think that's the last price relationship. Yeah, and this is what it looks like. Okay, now I don't expect you to understand everything from what I just showed you. I am going to go through the basics right after this. So in this case, you know, I took all of those price relationships from the different swings. I was running retracements, extensions, and projections to come up with a cluster that came in at the 257.34 to 259.46 area. There were 5 price levels in this cluster, and this is, you know, where they came from. We had 3 of the 100% projections, 1 50% retracement, and 1 1272 extension. And it gave us this zone to look at for a possible buy. Now we only look at these areas for entries if we test and hold. And then what we do is we go down to the lower time frame chart and wait for a trigger. And if it triggers, then you basically take the trade and define your risk underneath the zone. Okay, so this this example, I mean, this was a gorgeous rally. It took quite a bit of time, but you did see a rally of $127 in Adobe since then. All right. So your question might be, why use this type of Fibonacci analysis? And it's because it enables you to identify high probability, relatively low risk trade setups where the risk is clearly defined along with the targets. Okay, just need a little drink there. And this basically works on any time frame and essentially any good market data. You can't give me an IPO with 2 days worth of data and ask me to analyze that, but mostly everything else you can. I have applied this method to stocks, ETFs, futures, and the Forex markets, and it works in all of them. It is an excellent methodology to use with option strategies. Most of my traders use options. Also, with this work, you can see things in the market that you will never, ever see using indicators alone. Now, for those of you who are not familiar with Fibonacci numbers, I mean, this is the number series, okay? And I don't actually use the numbers for the analysis. I use the ratios derived from the number series. And what you'll find, if you get a little calculator, you'll find that in between these numbers, or if you take 21 by times 1618, you're going to get the next number in the series. So there's the basic golden ratio inside this number series, and then I use all the other related ratios that give me my work. So as far as the actual ratios that I'm going to use, 382, 50%, 618, 786, 100%, 1.272, and 1618. Occasionally, for a very, very large swing, I might use a 236 retracement. I use 2618 as my target number 3. And every once in a while, the market just goes insane. I might throw up, a 4.236 ratio. Okay, but the other ones I use these all day long, every day. Now, the 618 does come in between the numbers of the Fibonacci number series, but what about some of the other ratios? How are they related? So it's all related mathematically because, if you're taking 100% minus the 618, that's where you get the 382. If you wonder where the 786 comes from, it's the square root of 618. Square root of 1618 is 1272. I use that all the time as my initial upside target. And, just notice that all of these are actually related to each other. And then what I want to start with is, more of the basics. So I use 3 different types of price relationships to analyze the market. Okay, I use retracements, extensions, and projections. So we'll start with retracements, and this is just where I'm measuring prior low to high swings and using the retracement ratios of 382, 50%, 618, and 786 for potential support. And if I'm coming from a high to low, I'm using the same ratios for potential resistance. So here's an example of, just retracement ratio. This is actually a daily chart of square. This is where all I did was take the major low to high swing and run those, ratios. And you'll see that, only one area actually held. So what are you supposed to do with this? I mean, are you supposed to buy it here, get stopped, buy it here, get stopped, buy it here? Well, this one would have worked. You don't. There's a couple of things that I like to do, and I like to run Fibonacci price clusters, which means I'm looking for the coincidence of at least 3 Fibonacci price relationships that come together, and that identifies a setup. Okay. But the other thing that we're also going to do is, you're not going to take a trade against these areas without triggers or signals that, basically confirm that it's worth placing a bet against one of those areas. Here's another example of a retracement decision, just taking a prior high to low swing, running retracements. Again, 3 of them didn't hold at all. 618 did cap this market and, it rolled over nicely. Okay, but how do you know? Again, triggers and clusters. As far as Fibonacci price extensions, now price extensions are essentially retracements beyond 100%. you're only using 2 points when you're running the price extensions. Okay, so for example, I'm running a low to a high and extending downwards using 1272 and 1618 for possible support. Or I'm taking a prior high to low and extending upwards using the same ratios, looking for possible resistance. So here's some examples on a chart of Facebook. This is a daily chart. And one of the other things that I say every day, all day, is many moves tend to terminate at extensions of prior swings. So here's an extension. Took a high to a low. I ran the 1272 and the 1618. In this case, you had basically 2 hits at the 1272 extension. And then you blew through this one. We never know which one is going to hold. So, all we really do is that if you're in a trade and it gets up to the extension, you ratchet up your stops because you certainly don't want to sit through something like that. Then on the same chart, there's another example of the prior swing high to low. Here's the 1272, which didn't do anything. Here's the 1618, which actually put in a nice high, had a rather healthy pullback that you probably would not have wanted to sit through, okay, if you were in Facebook at that time. Okay, so that's an example of an extension. Here's another one in the case of Intel. Here's where I'm just taking the prior high to low swing, running the extensions. Nothing at the 1272, kissed the 1618 and rolled over. So anytime something is extended, tighten up your stops. It might continue higher, but I'd rather be safe than sorry. And let's see, whoops, I have to go back one here. All right, and then here's an extension on a weekly chart of CMG, okay? So here I took a major low to high swing, and we were going straight down in this one for a while, so I wanted to watch for areas where the move might terminate. No such luck at the 1272, but the 1618 extension ended up putting in a major low. So this is a pretty old example. I think we saw, a much bigger rally from that extension. And let's see, so 262.71 was the 1618 extension, and the actual low is 263. So, not perfect, but you can't expect it to be perfect. As long as it's close, you can trade against it. All right, so we did retracements and extensions. Now here's what I call price projections. Now I do have to say though that this one uses 3 points on the chart. And what gets very confusing is a lot of programs like Thinkorswim actually call the 3-pointed tool an extension tool. And it doesn't matter what you call the tool. It just matters that if you want to run projections, that you use the 3-pointed tool. Okay, and this is where I'm going to run prior low to high swings and project from another low. I'm going to use the ratios of 100% and 1.618 for the projections and look for possible resistance. Or I'm going to take prior high to low swings and project from another high using the same ratios and then look for possible support. So let's go through some of those examples. So here's what I call symmetry. Okay, so symmetry is similarity or equality when comparing swings in the same direction. So I'm only using the 100% projection for my symmetry projections. Okay, so for example, I had a prior high to low here that was $3.12. I projected from the next high 100% of that. That gave you the next support that ended up holding. This was only the difference of a penny, 13.12 versus 13.11, followed by rather healthy rally. Where was the risk? Well, you'll know, if it breaks underneath here, then you stop yourself out. All right, this next example, this is actually a 60-minute chart in Google, and I'm showing both the 100% and the 1618 projection in this case. So I took a low to a high, projected from the low. Now, we just blew through and gapped above the 100% projection, so nothing there. But at the 1618, it did find resistance. Okay, so it's worth knowing where these levels are at. And then here's another example. This is in S&P futures on a 30-minute chart. Here, the overall pattern was bearish, so I was looking for I wanted to look for new resistance, so I basically took some of these prior swings and projected from whatever the low was at that time. In this case, we had a 91-point rally. I projected that from here. This one was just a little bit less than that. 30.97 was the projection. 30.96 was the actual high. It's close enough. And one of the triggers that we like to use for futures is actually a 377 tick chart. So you would have seen an entry pretty quickly. Your initial risk would have been just above this area. All right. Now, my most powerful trade setup is called the Fibonacci price cluster. The coincidence, the definition is the coincidence of at least 3 Fibonacci price relationships that come together within a relatively tight range. So, this is going back to that Adobe example. So how do you use this? All right. I mean, are you supposed to just buy it and put a stop underneath there? I mean, some people do that, but it's better to wait for a trigger because there are so many of these setups that the market just blows through. So you want confirmation. So again, how do you trade this? So we need a trigger to tell us that it's worth placing a bet. And for this, I go down to a lower time frame chart. And you do that because you want to get triggered into the setup as close as possible to where your definition of risk is so that you're not risking a ridiculous amount of cash. So here's an example of what I would call a swing trade trigger in Adobe. This is a 30-minute chart. This is where it tested that key support. And then once you both took out a prior swing high and you had the 834 EMA crossover, then that was your buy signal in Adobe. Okay, so the way you make money with this work is setup plus trigger equals a trade entry, and then you manage it. And management just means, where's your initial stop going to go, and then how are you going to exit, and how are you going to trail up your stops. All right, let's see. So I have some other examples of, let's go back one, of clusters. This next one is in the stock Chewy. This is a daily chart. General pattern of this was, higher highs and higher lows. So I wanted to run the projections from the highs to call the next possible low. Okay, and that came in with actually a 236 retracement of one swing, 2 100% price projections, and a 618 retracement at 49.40 to 50.17. Actual low is made at 50.22, close enough. Okay, and then this not only made one target, it made 3 targets. Okay, the targets on any of my trend trade setups are the 1272, the swing into the zone. The 1618 is target 2, swing into the zone, and target 3 is the 2618. We get the 1272 target often, so that's why typically trail up stops after that's reached, just in case it's going to fail. Okay, here's another example. This is actually off a weekly chart on Amazon, and this actually shows you where there are a lot of swings that tend to be similar to other swings on the same chart. Here, for example, we had a decline of 292.40, projected that from this high, and that gave us the 17.43. Now that lasted for a little bit of a rally, but it did not do obviously what I wanted it to do, because if that was a more important low, we would have looked for a 1272 extension. But it did, it did give you some money. It just did not follow through. But then after that, then we had other swings that were very similar. So here's a swing. That was 365.40. This is 348.09. This is 364. Basically, I projected all of those from here, and that gave us the next big decision. And this time it did go to target. Okay, so it hit, it held, it triggered, and met at least target number 1. So that's Amazon. I've got another example in Disney. This is, again, a weekly chart. Sometimes you can't see the larger swings in the market. So if I can't find them on the daily chart, I back it up to a weekly. So in this case, again, I found similarity in the swings. This decline was 1990. This was 1985. And I projected both of those from this high, giving me this support around the 127 area. It hit, it held, it triggered. The risk initially was just underneath this area, which was not a ridiculous amount. The risk reward on these trade setups is pretty healthy. So it held, and we met target number 1, and then again failed, rolled over, and died after that. But you did see an initial rally at the, looks like 25 bucks. And that was Disney on a weekly chart. This is an old example, but I like it so much because it just shows you so much. Here, this was SherwinWilliams, and it was a weekly chart. So, on the daily chart, when this was coming down, it was like, oh, I wouldn't look at the buy side, looking at the daily chart because, it was going straight down. But if you back it up and look at the bigger picture, you'll see this prior decline was 76.08. This decline was 73 bucks. I projected both of those from this high. That gave us, the support where we ended up putting in the low. But what was also very interesting was, okay, so yeah, these two swings were more similar, 72, 79 and 73. And notice though that this took 15 weeks and this made the low exactly 15 weeks. So not only did we have price support, we had timing factors, okay? 15 weeks, 15 weeks. So that actually made the trade setup a bit stronger. All right, let's look at, this is a daily chart of Tesla, and I just want to share again how powerful symmetry can be. You can use symmetry by itself and make money. In this case, I'm just showing you the example of, these prior declines that ended up being similar. And, by projecting them from any new high, well, in this case, it gave you a really nice low and, beautiful rally. Now, it would have been difficult to stay in for that whole move, but, this was a great place that was identified just by simple symmetry projections. Let's see, I've got, this is probably a more recent example in Amazon. Now, I think I only really had, two symmetry projections and a 618 retracement. Now, you can run this stuff, for resistance, but if you're looking at a bullish pattern of higher highs and higher lows, then the path of least resistance is to look at the buy side again, especially if all the moving averages are bullish. On the daily charts, I like to look at a 200 simple and a 50 simple, and then I use the 513 EMA combo. And all of those were on the side of the bulls, okay? So here, the 26, 15, 14, the 26, 30, 68 area was the cluster decision. And looks like 26, 30, 08 was the actual low. And this was followed by, I think it actually made 3 targets, okay? But that was a rally of, 714 bucks. From a simple symmetry decision. Well, symmetry plus a 618. All right, so that's Amazon. This next decision, this was one that we saw in June in NVDA. Again, I'm just running all possible price relationships. So it can get kind of tedious because there's a lot of swings to run, not only the projections, but then retracements of multiple swings and sometimes extensions of prior swings. But in this case, we had, I've got to stop clicking that mouse too quick. We had 2 areas of support, but the high end ended up holding 350 to 79 to 356.17. It included a 50% retracement of one swing, a 786 retracement of another, and 100% projection of another. It hit, it held, it triggered, and it looks like it made at least 2 targets on the upside from there. And actually, we never, came back down through that area. All right, let's take a look at TLT. Okay, so this is a weekly chart. Again, sometimes I have to back it up and look at the bigger picture before I find some of these setups. But know that if you're running, the bigger picture stuff and you're looking at a huge swing, your potential on the upside is huge because, okay, so this was what, 1445 down, multiply that by 1272, and then you know what your potential is. We had a combination of a 382 retracement of one swing, 2 100% projections of prior swings. I think one of them was this high to low projected from here. A 786 retracement of another swing and a 1272 extension, probably of this low to this high extended downwards. Now it hit and held and it started to rally off of that area. But I never erase this stuff unless the market breaks it, because it came back and retested the original setup zone and held. And then you finally saw your target number 1, which was, you know, from this 133 to this 152 area. All right, that was TLT. This is an example of a counter trend decision. Anybody who's new, I suggest that they stay away from counter trend decisions. You know, you really want to be good at trend trading before you consider anything that would be counter trend. So here, let's see, there was an extension of one swing here that just happened to overlap the extension of another swing here. And then there was also a projection of this swing projected from here. That gave you a cluster of 3 price relationships between 73.90 to 74.61. Okay, and it hit, it held, it triggered. You know, and this is one that, again, I think that using options is really good for this work. All right. So now let's talk a little bit about timing. I hope I haven't confused the heck out of you so far, but now we're going to go into something that not a whole lot of people in the business use, okay? Because when they talk about timing the market, they're talking about timing it with indicators. That's not what we're doing here. We're actually running the same ratios on the time axis of the market to look for changing trend time periods, okay? So let's see. So we're using, again, the same ratios that I use on the price axis of the market and apply it to the time axis. For example, we're going to measure the time between a prior high-to-high swing and then multiply that time by the ratios and then project the results in the future. When we see time clusters, we look for a possible change in trend. Also, when time and price come together, you have a much higher probability trade setup. Okay, so I think this is just setting us up for the next example. This is a histogram that I use the dynamic trader from my mentor, Robert Miner. And I'd probably be out of business if I did not have his software because it makes it so much easier. But here, what I do is I'll measure, for example, from a prior low or a prior high. I'll run the projections that basically take the information from the key swing highs and lows that I mark on the chart, and then it will just put out the ratios and then give you a visual of where there's, you know, a standout decision where you might want to be aware of timing, you know, for a possible reversal. So in this case, it came in Feb 27th through the 29th, and this was in the S&P, and this is where I was projecting it from. So 227, 229, let's take a look at the actual chart. Okay, so here, now this was the histogram that I used. I basically had projected from the last high for the next possible low. Market's going straight down into it. So the histogram gave us the 27th through the 29th. The actual low was made on the 28th. And you saw a pretty healthy reversal. Now that's one way to do it, to run the histogram. But the other way is to just run the cycles outright. And a lot of programs do have these tools. So for example, here, if you measured a high-to-high swing, 1618 of that came in on the, looks like 28th. Then we also had another high-to-high swing, 1272 came in on February 28th. We had it looks like a low-to-low swing, 786 came in on the 26th, and another, it looks like low-to-low, 618 came in on the 28th, and another low-to-low, 100% came in on the 27th. So again, when you get a cluster of timing cycles, you definitely want to pay attention because, you know, you're likely short going into this. But if you know that you're in a time window where it's going to reverse, you're at least going to have a tight stop, okay? So that's an example of timing that was in S&P. Here's an example of just like a single cycle and the math behind it. Here's where I took a prior high-to-high swing. This is a daily chart on Lulu. And there were 37 days between the high-to-high, okay? You can see it here. Now, in this case, we ran a 1 272, time extension. So if you took 37 days, multiplied it by the 1.272, you're going to come up with 47 days. And here was the 47 days. We had that time relationship come in on the 20th, and that ended up being the actual high. Now, as far as timing is concerned, I always look at timing plus or minus a day of the cycles. Okay, so that means that the 19th or the 21st would be good, as far as calling it a hit for timing. But timing is definitely something that so many do not use at all, and you can actually use it on intraday charts. Okay, now I showed you the one cycle, but now I'm going to show you again a cluster. So there were 5 cycles between the 20th through the 21st. So one was, looks like high to high, 100%. Feb 20th, looks like this was a low to high projected from a low. Feb 21, looks like another high to high, 1272, Feb 20th. Low to low, 618, Feb 21st, and then another low to low, 1272, Feb 21st. Okay, so as we were trading straight up into a cluster of timing cycles, you certainly wanted to have a relatively tight stop. I mean, this was a very bullish chart going into it, but it was extended, and you had the time resistance. So it's just, added dimension of information to look at. Had another cycle, well, this was a setup in February, and basically this is where I had 6 time cycles on the weekly chart. Now this by itself is not extremely helpful, and that's because, if you're looking at all of these weeks of cycles and you're going plus or minus a day, you're talking about maybe a 5-week window. So that's not helpful by itself, but to know that you were facing an important cluster of timing cycles in February was important. And then we fine tune it with the daily chart cycles. So I think that's the next chart. Yeah, okay. So we had those weekly cycles, and then you also had cycles the 18th through the 21st here. So all from, different swings. I believe this was a low to a high from another low, came in on the 18th. I think this was a high to high, came in on the 20th. It's like another high to high, came in on the 21st. Low to low, 786 came in on the 21st, and low to low, 618 came in on the 20th. Okay, and this, was where we put in the high. So then that, it's a lot easier if you're looking at it plus or minus a day rather than, a 5-week time period. All right, and then here's also time symmetry is very important to watch, because swings will be similar to other swings in both price and time. So in this example of W day on a weekly chart, I had a rally swing that I found was very similar to this, so I measured it. It was 18 weeks up. It was $51.32. And then I projected it from that low. And this was 18 weeks up and 50.94. So not exactly equal, but pretty dang close. So when you run into something like that, you definitely want to trail up those stops. And okay, here's an example of some intraday timing. This was in Amazon, and I can actually use the smaller swings on the intraday chart. And in this case, what I did was I just used the histogram, and I had taken this last high and projected downwards to look for the next possible low. And when you have that visually in front of you, you can see that time is coming together, and then you can see that price was coming together. So you had time and price. All you really needed was a trigger, okay? And this met the minimum upside target. It looks like from where I have it labeled, that was a rally of 47.47. I do not expect you to get the whole swing, but if you're going to get something in the middle, because you've got a relatively short-term trigger, and then of course you have to trail up stops, and if you catch something in the middle, you should be a happy camper. And then that, I believe I have the trigger chart. Okay. For a lot of the day trade decisions. We just use 1-minute charts on stocks. Okay, I like to use the 377 tick on the S&P though, futures. But on Amazon, for example, this is where it tested that support. Here's where you had the moving average crossover, the 834 EMA, and then here's where you took out the prior swing high. So once both of those things occurred, it was a buy, and your stop was initially to be placed either underneath the low made prior to your buy signal or underneath the low end of the zone. And that's, something that you can choose. If you want to give it a little bit more room, then you just do it underneath the zone. Just depends on how you write up your trading plan. All right, and I think that, actually that's pretty much it for that presentation. So I guess I can take questions and see if I can find anything else to show you. Yeah, I guess I'm ready for questions. Am I supposed to see them anywhere, or are you guys going to feed them to me?
I'll go ahead and feed them to you, Carolyn.
Okay.
Once again, terrific presentation. Wow.
Thank you.
And so, it was kind of cool because there's some questions came in here. When you started with just a blank screen.
Yep.
We just saw black bars. That's it. And so when you're trading, this is from your perspective, are you just using those charts and your Fibonacci levels, or do you like to use other indicators or analysis things to help you determine, for example, a market setup that's coming and then apply some of these techniques?
I'm usually just using, Fibonacci plus a couple of the moving averages. However, there are some of the things that I do like to look at, like the squeeze indicator might be good for looking at triggers. It also can be used as a trigger, but for the most part, I just have a couple moving averages, and then I'm just running all possible price and time relationships.
Outstanding, like the chart we're looking at right now.
Yeah, this is actually, that's just a 30-minute chart of Apple. So this, as far as, this is one of the charts that I have in the trading room during the day. So, we saw a nice little rally off of, it was just a simple 382 and a 1272. It's not really an official setup. But here's the thing, this is our big decision tomorrow. If you cannot clear it, we can't expect it to continue to rally towards what I would be looking at for an upside target, which would be this 119.22 area. But this is the next decision. It comes in at 115.63 to 115.93. It's resistance that needs to be cleared. So a lot of times, if there's a hurdle in the market, that might keep you from, meeting the upside targets, this is another time where you can use the decisions on the flip side to help you manage the trade. Because you can say, well, I know that it needs to get through here, so how about I now have my stop underneath here.
Wow, very, very clean. As a matter of fact, it's, I'm not used to seeing a chart looking this clean from that standpoint.
Yeah.
Now, also, another question came up is that do Fibonacci's work equally well across all markets, whether you're looking at stocks, futures, or Forex? Or do you find in your experience they tend to work better in one market than another?
Well, I'll tell you, the only real exception is, I've used it for, like the Euro futures or something like that, and it works fine. I did find that unless I use a much higher time frame with Forex data, whether it's a 30 or 60 minute or a 1 hour chart, some of the micro charts don't work very well as far as this is concerned, but the currency futures work great, and stocks work great, futures work great. I do both stocks and futures every single day. And yeah.
Excellent. And the same kind of question came up with regard to time frame. Are there any time frame considerations? For example, I think what we're talking about is preferences. Is it better to use Fibonacci's on higher time frames, and how about tick charts and things of that nature?
Yeah, I like to set up my trades on a daily chart first, and then typically a 30-minute chart I'll look at after that, because, one of them is likely to give me a trade setup. But I prefer to at least have the daily on the right side. So for example, we have This is fine in the case of Microsoft. I have a cluster at the 204.22 to 204.85 area. Now we hit the zone and it held. And if we continue to hold above here, we're going to look for a potential upside target at the 216 area. And then the only other things I have on this chart are, this is where it might have trouble. It could have trouble at the 618. It needs to push through it. It could have trouble at the 786 that overlaps the 100% projection of that prior rally swing. That's another big resistance decision. But if we can continue to push through here, trail up your stops. If you don't, then 216.48 is going to be my target.
Mm-hmm. Wow, outstanding. Very, very interesting. And so, from your perspective, Carolyn, as a trader, how much time do you spend trading every day?
Honestly, I'm doing more analysis for everybody else and I am missing all the day trades that they are doing because I analyze probably 40 to 50 charts a day using this work. So if I'm doing anything, it's generally just, here and there, and I'm probably going to do a spread because if I'm like speaking in the trading room and all of a sudden, I need to get out of something, I usually miss it. So it's not a good thing for me to be in any kind of large position, but at least to have something small to, just to show and prove that it works.
Sure. Sure. And from your perspective, once again, I'm coming back to when you are a trader or when you were doing trading. How many trades did you take per day? And how long do you typically hold a trade?
Well, I'm going to say it's, I probably wouldn't do more than 3 or 4. 4 would be pushing it because if you end up in too many and the market goes against you, it's kind of difficult to get out of multiple positions. So I usually won't do very much. And every once in a while, I'll do a day trade, but it's typically going to be a swing trade against one of my daily setup decisions.
I gotcha. All right. Well, let's see, folks. We've got some more time here. Are there any additional questions okay, let me open up the question. I was looking at the chat and the question. What are your thoughts on SPY and gold right now?
Actually, I can't answer without.
How's that for putting you on the spot?
Well, I can't answer it without a chart. So
come on, Carolyn.
I'm going to open.
Surely it's one of those 50 charts you're analyzing.
Yeah. All right. Here. So this will be under this one. Yeah. I usually have 4 different workspaces open every single day with multiple charts.
All
right. So here's one.
Oh, good Lord. We didn't need to make
yeah, no, my computer's pretty fast. So now as far as gold is concerned, I actually had, I'm not sure why I erased the timing, but I had timing at this last low and key price support at this 1833.30 area. The only problem is that because the pattern from the last high is still lower lows and lower highs, we had to watch for possible failure. Okay, and that's what we're getting right here, right now. But here's the thing. Typically, I would look for, if I was just looking at this by itself and say, okay, this is a sell setup. I'm going to anticipate a 1272 extension as my downside target down at this, 1830 area. And that's what I would look at. But because I had time and price at that last low, I'm actually watching the pullback to this last low for a possible resumption of the rally. I do not have a new buy trigger yet, but if we do, I'm going to watch tomorrow. If we do start to see renewed buy signals, then I will look for at least another swing up, possibly maybe the 1272 extension of whatever that swing is. That's what I would look for that. What was the other one?
See, the other question was the SPY.
Okay, so that one, I'm going to need my other. We'll just
come on, Carolyn, we want it now.
Yeah, right. Okay, let's see. Here we go. This. All right, it shouldn't take that long because there's a fewer fewer charts on this workspace.
And there was also sort of a question there you might be able to answer in between their questions. Several questions came in about what are those moving averages that you like to use?
Oh, on the daily chart, I like to use the 200 and the 50 simple. And then I also use a 513 EMA combo. Okay. The 513 does help you stay on the right side. It's not going to work 100% of the time, but it's very helpful if you have the moving averages on the right side. And my intraday charts, I typically use an 834 EMA, but I have been testing some other combos. It makes more sense to get triggered closer to the zone. So for stocks like Amazon, I'm testing a 513 EMA on the intraday chart for a trigger, because otherwise it may take a little bit too long to trigger an entry.
Sure.
Okay, S&P. Okay, in the bigger picture, okay, there is the possibility, because I did have timing at this last low, that if we can push through the retracements, / hurdles on the way up, we have potential for a 1272 extension. And what I like about it right now is that we are above the 200, above the 50, and the 5 and 13 are in a buy mode. So that's positive. So right now, I'm still going to focus on buying the pullbacks in this one. However, here's the big but, or well, it's just at least a piece of information that tells you that you've got to watch for a possible failure, okay, or you have a reason to ratchet up stops in this, because I do have timing cycles. Let's see. The outright cycles came in the 5th through the 8th, and the histogram comes in the 6th through the 9th. So we're actually in a time window where you have to be prepared, for a possible failure. So what does that tell you? I mean, it doesn't mean that I want you to short the market at this point, but I want you to ratchet up stops if you're long. And then as far as I'd leave any of the shorting to the, shorter term traders, that can be in and out pretty quickly during the day.
Sure. Wow. Interesting. Fascinating. Additional questions have come in. Here's one from Henry. He says, could you recap briefly the time and price confluence in your identifying the setups?
Well, it would be like, okay, as you see that we're close to resistance here in the S&P cash. The area of the 618 retracement, it also overlaps a 1618 extension. So like right now, we have timing factors and we have price. And this becomes, a higher probability decision when both time and price come together.
Sure. Great example, as a matter of fact.
Yeah.
Several people, I love this one. Do you have a favorite ticker that you like to trade?
I mean, I've had fun with the Netflix and, a lot of the main stocks that I'm watching during the day: Apple, Amazon, Facebook, Google, Microsoft. I like Microsoft too. NVDA, Tesla.
Okay,
those
great.
Are some of the main ones.
So Carolyn, as we're winding down here a little bit, what kind of services do you have to offer? How can people follow you, take advantage, learn more about what you got going on?
Okay, well, I mean, I do run like an end of day video, but I also am in a trading room all day long, where the live charts are showing as they are testing the key support and resistance decisions.
Okay.
And then I also go over the charts. It takes me about at least an hour and a half to update the charts first thing in the morning because I have so many. But then after that, I go ahead and talk about them and recap the setups, and then I'm available for questions during the day. But I do teach people how to use it. I don't give them the actual entries. I'll tell them you can use these zones, and if you're a day trader, you use a 1-minute chart. If you're a swing trader, you wait for a 15-minute.
Sure.
And then this way, the person can take control of what they're supposed to do instead of asking me, oh, what, where's my entry? Where's my exit? Am I supposed to get out now? I can't do that. I can't focus. I won't be able to work. Right?
Yeah, no, I got you. Absolutely, because it can be like a fire hose and then trying to address all that. Oh, that's terrific. Well, let's see here if we have any other questions that have coming in. Uh, yeah. So we do have, so Carolyn, we did have an offer that was shared to us by the Simpler folks, a $7 offering for your Fibonacci market analysis program. And we've got a link for that we're going to put up to here as we do the outro. But thank you once again so much for your time today and for spending, for closing out what has been a tremendous day for us. One of the things I can share with you, Carolyn, and share with everybody here that's really impressed me, each one of the speakers today, and I don't know whether this is a trait because we all have women here, but I think it is, a lot of focus on having a plan, understanding what's
trading
going
plan.
on in the market, and minimizing emotion in the trade. That's been a constant theme from everybody that is presented today. Also, a focus on risk and risk management.
Yeah.
And this is just good advice for anybody, but I've given so many of these, and speaker to speaker to speaker has really emphasized that as a critical part of their success and what they recommend, to traders and to their students. And Carolyn, it's obvious from your presentation as well, you didn't come here overnight.
No, I've been around for a long time. Also, so I do stuff at Simpler, but you'll also find me at, I'm also on ElliottWaveTrader.net, and I also work for Kramer, so I write, but I only write for him once a week at this point because I've just gotten way too busy.
Sure. So you're the person behind Bye Bye Bye?
Maybe.
Well, that's terrific. Well, thank you so much, Carolyn, once again for being with us. It's been an absolute joy. I've known you for some time, but this is the first time I've actually had a chance to work with you. And it was a pleasure to do that.
Well, thank you. Thanks for having me.
You're welcome.
Appreciate
All right.
Okay, folks, I'm going to bring up Carolyn's screen here. Let me go ahead and
I'm going to ask the moderators to go ahead and put the link into Elliott Wave Traders.
Yeah, absolutely. So Carolyn Boroden, the Fibonacci Queen, she does have a special program, Simpler Fibonacci Market Analysis. It's a $7 package, which is pretty amazing. It includes premium nightly videos, which help you set up for tomorrow's action, twice a week live Fibonacci breakout room, and live webinars that she holds that features ongoing Fibonacci education and application. You can see the link there, and we're going to put that in the chat panel. I also want to mention to everybody, because once again, there's so much information here. We'll probably emphasize this in a few more minutes, but everything has been recorded. And we're going to have these recordings out to you, this weekend. So it's important because, once again, I've absorbed so much information. I can't write fast enough on my notes, and I'm just really happy to know that I personally am going to have a chance to review these presentations after the fact. So with that, folks, we're just at the top of the hour here. Time for our last quiz of the day.
Raleigh, if you would, we are still on Carolyn's screen. We haven't seen your screen yet.
Oh, okay. Well, we're going to handle that right now.
All right. Well,
there you go. This is my first rodeo.
It's all these women. They're distracting.
I am. I'm in the ladies' locker room. I never knew it was so plush.
Yeah, so we're going to wrap up with a quiz. We're going to make a few announcements just before the quiz, so don't take off. We've really had a great day today. I'm just amazed with some of the tips that these ladies have shared with us quite generously. And we've had a lot of fun along the way. So I hope you've enjoyed it as well. We couldn't do this without our sponsors. So I'm going to just say once again, thank you to Tasty Trade DTI, You Can Trade, Tips for Traders, and Traders Agency. And one more little thing before quiz time. Make certain you join us tomorrow. We're going to do Wine and Women, the last segment of the day. We're practicing.
Yeah, just a little bit.
Yeah, just to make sure. Don't want to be amateurs.
Exactly.
Yes.
Does this
But-
qualify as a wine glass?
I'm envious. That'll have a lot more than mine. And so what we're going to do is we're just going to have fun with the questions. So encourage everybody to pop some questions in now that you might want us to ask at the ask the experts, or you can send it to an email at events@westmarktrading.com. Again, our moderators will put that link in. And let's get right onto quiz time. You know how it works by now. First one to answer correctly, our moderators share that with us, and you'll get a $100 Amazon gift card.
All right.
Okay, drum roll. 3, 2, 1.
Who played Tess McGill in the movie Working Girl? One I know, finally. Yes. This should be a short and sweet answer. Tess McGill in the movie Working Girl. Oh, come on. I can't believe this. All right. So we did get Nancy Platzer. Thank you for answering that, Nancy.
Good job.
Yes,
Congratulations.
yes. And
Congratulations. And the answer is?
Melanie Griffith in 1988. Good heavens.
Wow. I think we had one of the songs playing on the intro from that.